Australia's property prices are expected to hit all-time highs in 2026. If you're thinking about buying, this could be your shot. And if you already own and thinking about selling, when's the right time to sell and maximize that profit? We'll break it down with the latest data and expert opinions to help you decide. Let's get into it. Hey guys, welcome back to Peter Kelly Property. Keen to get into it. Hope everyone's had a great week. All right, PropTrack is expecting, and it's their opinion, that we're going to hit record house prices in 2026. What's driving that? What are the factors? So firstly, money's getting cheaper. So we've seen the most aggressive rate hiking cycle in a very, very long time. We saw 14 consecutive rate increases, and property remained reasonably solid. Melbourne's had a bit of a tough road for other reasons, taxes post-COVID, all these sorts of things. But across the board, across the nation, property stayed reasonably staunch, and that's what it does in tough times because it's such a great asset class. But we are expecting interest rates to come off, and there are a few banks, like I've said on a few different pods recently, expecting 1% to 1.5% over the next 12 to 18 months. So if we factor this into people's borrowing capacity, like I've mentioned, if a percent comes off, the average loan and the average mortgage holder will save about $500, $600 a month cash. So they're real changes and real shifts that are going to matter to people looking to buy, looking to invest, looking to upsize, downsize. It's going to really motivate the market to get in and do those transactions. So money's going to get cheaper. That's a huge driver. Next one, immigration. The immigration tap firmly turned on, as we know. So as more people enter the country, whether they're buyers, whether they're renters, whatever it is, they're going to need housing. Okay, so housing's super important, as we know. So as more people come in, we need more houses. That's going to affect the supply and demand. Now, that feeds into the next driver, which is housing supply. So housing supply is at all-time lows. So the way we're generating our new houses into the market is at an all-time low for all factors that here at Little Fish we know all too well and we've managed for years. Okay, so we've got expensive labor and a lack of labor going to these big infrastructure projects and pulling labor out of the residential sector. We've got material increases that we've seen through COVID. All these things are factoring in to increase build costs and make it harder for people to invest and actually get projects off the ground, get builders turning dirt. The other big one is all the requirements, the SDA requirements, so the sustainability requirements, and the fact that we're all 7-star now. All these type of things and these factors that are a great idea at the time, all they do is just push cost, which pushes cost onto the consumer, the developer, whoever it is that's looking to increase the housing stock, puts extra pressure on them to actually move forward and do a project. So all these factors are going to contribute to a very, very strong property market once they all come together and once they all collide. So we've got the cheaper money happening. That's going to happen in the next year or so. We've got immigration. So we've got the demand for houses going up and skyrocketing. So demand going higher and supply battling. And as we know, so like any markets, it's a supply and demand issue, and that's what we're seeing. And the issue is, which I'll touch on and I'll stay on this for a little bit, is the supply issue. I saw a report the other day which broke down the nation's goal for new housing. And their goal is about 240,000 new houses per year. Now, in 2017, so circa 8 years ago, the landscape was very different, very, very different. Trades, materials, like I said about the housing requirements, everything was a much more easier. It was good times to be a builder and good times to be smashing out these projects. We did 220,000 in 2017. Okay, and that was a peak. That was the best year we've had in decades. Now they want to do 240,000 year on year average. No hope, no hope, no idea. They got no idea how to hit that, because I'm telling you, we're boots on the ground, and it's never been harder to get these projects off the ground. They've never been more expensive, and the amount of people that can do them has shrunk because it's an affordability thing as well. So that's going to be a tricky one. So all those things put together, we're going to have a real issue bringing that supply chain of new houses back up to where it needs to be. So the supply issue is going to be a thing, and the demand is going to remain there. So what's that going to do to property? It's going to keep it going up, money getting cheaper, and the supply demand is not going to fix itself anytime soon. Okay, so just finishing up on PropTrack's expectations. Currently in 2025, nationwide, we've seen a 2.7% increase already on the back of 2 rate cuts. This is across the whole country. And they're predicting by the end of the year we'll be at 5% increase this year in 2025. And they're saying 2026 is going to be the big one. Okay. All right, guys. So those are the drivers that's going to drive this property market into 2026. Now let's look at the stats. Bonnie's found us a graph here from PropTrack. It's the last 5 years. It's got all the major capitals in Australia. Let's go through it. And for anyone on the audio, I'm going to talk you through it. Those on YouTube, enjoy the graph. Bonnie's got it up on the screen. Let's go through it, but I'll talk everyone through it on the audio. Now, Sydney's growth has just continued. And Sydney, as the most expensive capital city, has just got further from its closest opposition, which is now Brisbane. Brisbane's come up from circa 4th, bang, into 2nd position. But in saying that, Perth, Adelaide, Melbourne, Brisbane, they're all in a bit of a clump. We've got Canberra in that mix as well. So 2nd, 3rd, 4th, 5th place capital centres in Australia have got pretty busy with each other. And then obviously we've got Darwin, sunny Darwin, and Hobart down the bottom there as well. But I think one of the major things that we can see with this graph is we've got Perth, Adelaide, and Brisbane that have done amazing things in the last couple of years. Here we go, PropTrack. Perth, 18% annual growth, 14% for Adelaide, and around 13% for Brisbane. So they've really put themselves up into the conversation while Melbourne has eased. So it's created quite a traffic jam, I guess, in that sort of band. And Sydney's growth has just continued, and it's put a massive gap on everywhere else. So it becomes harder and harder market to get into, and that's why people find these other capital centres to play in and invest in and all that sort of stuff. So there you go. That's an amazing graph, Bonnie. And remember, all these things have been going on whilst we've seen the most aggressive interest rate hiking that we've seen for a very long time. So super interesting. Like I said, we've seen Perth, Adelaide, and Brisbane go on an amazing run. So as interest rates ease, have these capital centres got more growth in them to come? A lot of the things we're seeing out there and a lot of the signs, we speak to people all day, every day looking to invest here in Victoria. And I must admit, we are seeing people have enjoyed growth in those areas and now are looking to Melbourne as potentially the next one to go. Melbourne, Greater Melbourne and Victoria. So that's interesting. That's more boots on the ground. That's what we're hearing. I spoke to a lady on the Sunshine Coast the other day. She finished a development and she just said, I don't think it's going to continue up here. So she's going to wrap that development up, finish that up, and then plonk into Melbourne. So this is what people do. These are their strategies, and they try and strategize and try and figure out how to get on the moving trains. Rather than sort of, I guess, sit and hold if they think a market's going to be a bit stagnant. Okay. Anyway, Bonnie. All right. Now let's get into the prediction. Let's get into the predictions from PropTrack. So let's go around. If you're on audio, I'm going to bang through them all. If you're on YouTube, enjoy. And what we're seeing across the board and what they're predicting in 25, 26 financial year. So that's about to kick off shortly. We're going to see houses at 6% growth and units at 5% growth. Going around the country, we've got Brisbane at circa 5%. Sydney, they're predicting another 7%. Canberra, 4%. Melbourne, 6%. Gee, that'd be nice because we've been flat. We've got Adelaide at 4% and Perth at 5%. So even the three, the big performers, Adelaide, Perth, Brisbane, they're still predicting another circa, 4 to 6% for those areas. And then Sydney and Melbourne, your sort of 6%. So, which makes sense, right? Okay, so like I said, we've seen this growth. We've seen this growth over the last couple of years. Couple of the centres have been a bit stagnant, Melbourne included, and your smaller guys. But like I said earlier, we're going to see the supply issue of new homes continue. We're going to see immigration, the demand continue. And it's not going to be able to keep up. It's not going to be fixed anytime soon. And money's going to get cheaper. Okay, money's going to get cheaper. Inflation's in check. All the markers that they're looking for are heading in the right direction. And potentially we see an interest rate cut in July, guys. So it could be the third interest rate cut. As I said, a lot of the banks, a lot of the economists are tipping more cuts this year and more cuts next year again. And as the macro indicators suggest, there's some unrest out there. You got Trump doing his thing. Yeah, obviously those tariffs coming in soon enough. So there's a lot of things going on. Interest rates will continue to come off, is what they're saying. So why won't property keep going up? Based on what we're talking about. All right, guys, that's a wrap, okay? So let's wrap it up. So if you're a buyer, is it a good time to buy? I would think so. Definitely. That we're going to see some nice growth over the next year or two. So it very much can be a good time to get involved. And if you're looking to sell and you're not in a rush to sell and you're more trying to time the market, which is hard, but we've got some nice indicators and some nice drivers there to suggest we can time the market somewhat, potentially in a year or so could be a better time to sell the market and take those profits off the table if that's your strategy and that's what you're looking to do, because we take an extra percent off, an extra 1.5% off interest rates, and that supply and demand issue continues. I only see good things for property, so could be a good time to keep your powder dry. Maybe let those tenants rent it for another year or so. If you're living in a property, you're looking to sell it, maybe wait a while. But remember, if you are an owner-occ and you are looking to sell then buy, if you're doing that in the same markets, well, that insulates you from any growth that you're going to miss out on. So don't stress too much being an owner-occupier if you're going to buy, sell. As long as you're doing it in the same markets, happy days, and you don't take too long to make that next purchase because you don't want that growth to happen while you're sitting on the sidelines. But if you are an investor and you're potentially looking to liquidate that property asset because that's your goal and your strategy, that's what you need to do, could be a good time just to keep your powder dry for another year and see that growth continue. All right, guys, thanks for hanging around this long. If you're still here, you're a legend and we love you. So make sure you're subscribed, turn the bell notifications on. And if you like this sort of content, make sure you get inside the littlefishnetwork.com.au. In there, we drop a lot of this content. We drop special resources that we work on the side that are exclusive to the network. So jump in there, enjoy that, and it's free. It's free. Sign up. The fastest growing property network in Australia. Thank me later. Come across to Instagram. Come say hello there at Peter Kelly Property. And have a great weekend, guys. It's been a good week. Enjoy the weekend. Refresh yourselves. And we'll see you again Monday.